Hello, hello, hello. Happy Thursday. How is everyone doing this morning? Good morning, John. Good morning, Patrick. Good morning, Andrea. Good morning, Martinez. Good morning, Sterling. Thank you for putting in some earnings. NVIDIA yesterday afternoon was a beat. Foot Locker, miss. Chips, not shoes. Good morning, Jake. Good morning, David. Best Buy was a missing on revenue, blaming it on tariffs. And guidance was also reduced with concerns on tariffs. Even though the court struck down tariffs, or most of the tariffs yesterday, but let's see how long until they are back. Let's see. I don't think they're going to be permanently disappeared, and I don't think the market does either. A little pop after yesterday, but then realizing that they could be reimposed at a lesser rate under different sections. So, good morning, Jacob. Burlington stores beat miss. I haven't seen a Burlington in a while. Consumer spending, we'll get to those numbers. 1.2 versus 1.8 prior or expected. Good morning, Royal Palms. Good morning, Harold. Good morning, Daniel. Good morning, PMG. There we go. All right. We got some other stuff coming out today. Strong is putting in the chat. I'll just review it here. We had the GDP. This is the second estimate of the first quarter. Consensus was minus 0.3% coming in at minus 0.2. When it says prior, that was for Q4 of last year. That wasn't the prior estimate. That was for Q4. Corporate profits also down pretty big. Corporate profits contracting 3.6%. Consensus was 5.9% expansion. What else do we have? Initial jobless claims, 240, a bump up in here. They're edging up. Prior was 226, now they're 240. Consensus was 230. And continuing jobless claims coming in above 1.9 again. So, and above consensus of 18. So jobless claims continue to rise. Now the PCE prices, this is for the whole quarter. Second estimate of Q1 was 3.4%, coming in a little better than consensus at 3.5, but up from 2.6 in the fourth quarter. What else do we have that's important? Real consumer spending, second estimate for Q1, consensus 1.8, came in at 1.2. All right, so mixed bunch of numbers there. I think the market's more reacting to the tariff off and on situation. But those jobless claims are one to watch moving forward. What else do we have? I saw a bunch of stuff pop in here from Sterling. 3 trade deals basically done. Well, we will see. We will see. They think the judges I'm not so sure it'll be overturned. I think will try to reimpose tariffs under other means. So, and they tried to do it through a national emergency. I'm sorry, this is not a national emergency. Trade's been going on like this way for a while. You can try to frame it that way, but guess what? You find a way to do it if you're going to do it, but don't try to do it. That's why it was overturned. Yeah, I saw that. There's a lot more sellers than buyers, the most on record that will likely cause home prices to fall. There's a little interesting point. Yes, people who have to sell are lowering their prices. People who don't. The problem is a lot of people, they can't find another place if they lower their price too much, they sell their house and then they're like, they have to try to find another deal. And a lot of people still aren't lowering their house price. So you have to find somebody who has to sell. And there'll be more of those coming up with job losses. Good morning, McRangers. Good morning. So, what is going on? All right. What else do we have? We have pending home sales coming in at 10 a.m. Eastern. The crude numbers on Thursday because of the Memorial Day holiday on Monday. So crude numbers coming out today. EIA numbers, I should say. Mortgage rates coming out at noon. Then we got this afternoon, we got Kugler, Daly, and Logan speaking this evening. Remember, tomorrow morning is the PCE price index for April. Still expected to be very benign. I think next month is going to get more interesting. And we have consumer sentiment numbers. The S&P 500 map, right here. NVIDIA up 5.60. Options were pricing in about a 6% move, so this is just under that move. Broadcom, all the chips rising in conjunction with NVIDIA. Tech rising off the tariff stuff. We already have some doubles that are still playing out, like Amazon and Meta. Tesla on, again, how many times is it going to get repeated? Elon returning to Tesla. Well, let's buy. I'm still watching for rollover plays, and they're supposed to be rolling out their robo taxi ride sharing. Let's see how that goes. Other than that, mega caps and tech leading the way. Mega caps and tech leading the way. Your groups, let me just refresh this. Technology, consumer, cyclical leading the way, but everything is positive today. Consumer defensive lagging, only up on 2 basis points, but still everything is positive going into the open. Fed watch still has 2 cuts priced in. Fear and greed, still solidly in greed. Schiller PE, 30 over 36. Thank you again, Sterling, for putting in the earnings. What's important this afternoon? Costco. You have also Dell and Zscaler, Ulta, Gap, but the big one's going to be Costco. The big one's going to be Costco to see how they pan out with earnings. And tomorrow morning, there is not much at all, unless you're there's your Shoe Carnival. Shoe Carnival leading the way tomorrow. All right. Good morning, Heinrich. Thank you for tuning in. Okay. What do we have? Well, we had the spike up, the rally up. Oh, last night I think it's dawning on people, though, the tariffs aren't going to be disappeared for very long. Coming back down now, the double top in the S&P, I should call it the potential double top, is still in play. We also finally, the 87.5, remember 59, 99, 75, is completed. So the 87.5 rule is now completed. All right. I cannot do anything, though, to the only thing that would get me short this market in the short term would be, because we're still within the rising rotation zone, would be if we triggered this little mini double, which would be for the bigger pullback. And why would I be considering that? It would be dropping back below the first cross the rotation zone on the weekly. I'd really be focused on this first target area, and we have weekly cycles going over. Now, why I'm just not going into it full force, we still have daily cycles turning up. So I want to see what happens tomorrow. What happens tomorrow, especially with the end of the month. Then we're into June trading next week. Going today, though, we're trading right back at very key support. This 59.40 area, 59.40 to about 59.35, I'm watching to see if we can get a bounce play in there. If not, then I'm all the way back. There's a lot of support structure here, 59.20 and then 5900. It's backfilling into a lot of support levels. All right. On a continued bounce back up, I'm just looking at these, again, these minor harmonics now, especially the 59.75 area. To the NASDAQ. The NASDAQ, with the spike up last night, went through the 25% extension, this 21,771. So that took, in the NASDAQ, there is no more potential double top. So the double is remaining in the S&P, but not in the NASDAQ. On a bigger pullback in the NASDAQ, very key support is about 21,300. All right, and still NASDAQ cycles at the top, but on the breakdown, I'm really paying attention to this 20,500 level. If we get a bigger pullback, that's also where the flat 200 or the slightly rising 200 and the just above where the 50 EMA is turning up. Today, though, on any rally, same thing. If this low holds, I'm really watching this 21,740 to 21,764 key resistance. If we pull back, I'm looking at closer to 21,565. All right. And I just want to check something else from the move from last night. I'm going to revise that. Before 21,565, I'm looking at 21,590 if we drop through the lows from 8 a.m. That's what I'm looking for because that's a 50% harmonic from the run-up. Let me revise that statement. Okay. All right. By the way, if we do take out today's high at some point, including tomorrow, my next target, the next major target is 22,200. The Dow spiked up last night to put it in potential double top territory. So the Dow does have a potential double top. It's tried to spike back above the 200 and again sold off, but the trigger point for that is not until the Dow were to close below 41,236. So there is a potential topping pattern in there. The Russell, remember, is no double. It just spiked into consolidation. My key level was 21.26, spiking up there and then reversing. So still key support is 2032, 21.26 is key resistance. Other than that, it's just trading support resistance unless we have breakout or breakdown plays below those two levels. But those are the two ones I'm watching for support resistance. VIX still what are we trading? What, 1910? Nothing in terms of bigger sell-offs unless we get if we start grinding above 20. The DAX getting lopsided, but still technically in play, not invalidated the potential double top. Be shocked if it triggers before getting invalidated, but it's still technically there. Good morning, Richard. Good morning, Anissa. So, Jim Bianco says we're in a new inflation paradigm where we are not going back to 2% and risk-free rates normalized around 5%. Can equities possibly provide forward returns to warrant the risk? No. Nope. And I'm in agreement with a lot that Jim says because, again, that's why I've been harping on inflation being higher. And it doesn't have to go back to 5-6%. I think it's going to get stuck between 2.5% and 3%. Okay, and that hurts. That hurts. I mean, its prices are still grinding higher. And I think real rates will have to be closer to 5% again. I mean, the 10 years could be easily back to 5% coming up. So we will have to see. But no, you don't. If rates are producing 5%, because, all right, also, I harp on the Shiller PE. That does not mean that, in the short term, that doesn't have much to say because the market can keep, it's been up there for a long time. But on 10-year returns, based off of Shiller PE, where it is now, 10-year returns are flat to slightly negative, which means if you let's say you jam money in the market right now, over the next 10 years, yeah, you'll have up years, you'll have down years, but that money is not expected to grow. And you have 2 to 3% inflation, let's say. Now, 2% to 3% inflation, if we go into a massive, massive recession / even something worse, then I'll change my tune on that. But would you rather take rates at 5%? Let's say the 10-year got back to 5%. So you could lock in 5% for the next 10 years versus an expected return of flat to slightly negative by staying in the stock market. Something's got to give. Okay, so I'm in agreement with a lot of what he has to say. There you go, Sterling. You're watching your own 87.5% rules. Love that 87.5% rules. I hope people, again, that's why in the short term, that's why we came up here just missing out, still looking for longs, tapped it off. That does not mean we get short, but hey, we completed the 87.5 rule. Now the magnet price is done, and I'm watching for potential topping patterns. We do have a potential topping pattern, might never trigger. This could, again, continue to grind higher into very major resistance. Let's jump back to the 10 years. Again, pulling back, little up and down based off tariff stuff. This might actually drop tomorrow with a little short-term PCE coming out. It's not gonna be major tomorrow to the upside, but next month could be a shock. But I'm looking for it to build a higher base. We were up above 4.5%. The 30-year Still, it's pulled back. Tried to spike above 5%, still trying to do this, but look at this. That does not look like a bearish yield pattern on the 30-year. If this was a stock chart, I'd still be looking for buy signals in it. So buy signals in the yield means increasing yield. Dollar index. Pop up last night and reversal. Reversal. Still going to be paying attention to this. Now, I'm watching slightly to see if this little low area holds. This rising channel line holds. Even if that were to hold, it would not invalidate this. This is a major weekly potential double bottom, and people are still so bearish on the dollar. I think it's getting a lopsided trade in there, but I need a bigger. We had a little percent beat buy trigger, which we bounced off of that. But again, nothing sustainable unless we trigger this double bottom. Crude, still holding major support. Double top, still confirmed. Not off the table yet. Nearly invalidated on the spike, but not quite yet. Right now, I'm paying attention to see on the bullish side if we close above this 50. If we close above the 50 EMA, then I'm going to be watching for this other potential bottoming pattern to trigger, which is a weekly trigger. That's about it. Other than that, if the short triggers, then I'll be looking for the bigger pullback. Gold, trying to rally up again. Remember, it closed above the 62.5. The double is still not technically invalidated, but I was advising people that if you were short, unwind some shorts on any pullbacks, and because we've reset this based off the 62.5 rule. And the longer term trend is still up. So, still looking. Now, that does not mean we're necessarily going to break out anytime soon to new higher prices. We have a lot of overhead resistance. But again, anything short is, from my perspective, is not warranted just yet. Copper back in the range, so it tried to break out. Reconfirming the key resistance here. Now I'm going to be watching to see if this does rotate back up and sort of tries to form a higher base here, but now the breakout pattern is back to 488. 40-year continue to drop steadily back in the rotation zone. I'm going to now be walking for the secondary reaction. That's the Japanese 40-year. The yen, not technically in double bottom territory yet. That's the only thing I'm looking for there. Euro, not technically in double top territory yet. Those are the only things I'm watching there. Spiders. All right. Spider, we got the gap up today to 593. On any pullback, I'm looking at around 591.50. And then if we rolled over the next couple of days, it would be for the gap fill 587.73. Key resistance is the prior high from Monday, May 19th at 595.54. Then we're looking at 598.03. If it breaks out above 653, it invalidates the potential double top. So that's where we sit there. The Qs, 526.54 is where we're gapping up today. Still, the Qs has not, even with this gap up, it needs to trade above 527.36 to take the double top, which is an extended double top and not the strongest pattern. So I'm taking it with a grain of salt. But to completely invalidate it, it's 527.36. We're opening up above the key little harmonic level at 525.18. So on any pullback, that's what I'm looking for. And then your major support's coming in at 522.50 to 522.60 area. Bitcoin, no real pop in that off the tariff news. No real pop in that. Still has a potential double top. Still not confirmed yet. That's the only short-term potential pullback there. Otherwise, just building a solid higher base. What else? What else? Is there a trigger daily double bottom in XYZ? Well, that's yeah. It's technically gonna probably be triggered on the weekly in block. I'd be looking at that. So yeah, and even separate from that, on any pullbacks, as long as with the rising rotation zone and this holds up, that's a triggered pattern. I'd be looking for potential longs in that on any pullback into the prior key area. You can see it on the weekly, really nice. It's still not above the weekly rotation zone, so that's the heavy lifting it's got to do. I'd be keeping an eye on it on the weekend. Can I view Tesla? You are welcome, PMG. Again, nothing has really changed from my perspective until we close above 385. The probability has not shifted. It's just continuing to grind higher, holding the rotation zone. So if you're looking for longs, I watch any pullbacks that are rotation zones, but the key target area is this 385, just above the massive breakdown zone. Other than that, there's no short setup right now. I'm looking for rollovers, but there isn't one yet. Okay? It would have to at least start getting below 333 before I'd more aggressively look for anything. Other than that, it's continued looking for longs, but very cautiously because we're still in the rollover zone between the 50 and the 62.5. NVIDIA, remember the magnet price is still 144.82, trading pre-market 142. So going to be watching for that too. Broadcom ticked off the 87.5 rule yesterday. That does not mean it has to stop, but it's coming into major resistance with earnings next week. So that's going to be interesting also. It'll be very interesting also. If it does, this will be interesting though for people looking to see if you're going into earnings very bullish on it. The key harmonics, if it does take out the highs, 251.88, 266, and then 280. Just look at some, and by the way, keep in mind it's not cheap at anything, not cheap at all. So, but its momentum is still up. All right, let's just peek at the S&P going in the open. Again, not much has changed. Just trying to build a base at the prior key resistance becoming support. So as long as this area holds, I'll be looking for bounce plays. If this area breaks, then I'm going to go watch for the bigger pullback. The bigger pullback closer to the bottom of the 4-hour rotation zone. That's where we sit. Can Tesla be traded as a cup and handle? No. Not at all. Was there a percent B buy and where on Tesla? I think you meant Tesla. There was a percent B buy back on May 22nd, right here. And it was a rotation zone buy. That was your last one on the daily. On the weekly, there has not. I'd have to look at that. I'd have to expand that, but there's not been a solid one. The last daily one was here. Before that, you had none. That was not one. That was the last one. Back here on the 22nd. So, all right, that's where we sit right now. I hope everyone has a wonderful trading day. Remember, PCE numbers out tomorrow, Costco earnings this afternoon. Until that, I'll see everybody tomorrow morning. Bye for now.